Hello and welcome to another update video about Ethereum. So we take a look at the daily chart first, and then we'll take a look at the shorter time frame. Here on the daily chart for Ethereum, you can identify the start of wave 5 to the upside, potentially, from down here. This is of course early days, and I'm not trusting it until we really get more signals on the smaller time frame. Just wanted to highlight again that we have hit the golden ratio level at $1,790. It's an absolute important level to watch. 61.8 retracement is the golden ratio level, typically very, very important. Broke slightly below that, but that is not a problem. And it is still seen as potentially a wave 4 that was formed here. But to really keep this scenario alive, we need to see a reversal from here. Ideally, a first 5-wave move up from the low, which we maybe have, but I don't trust it at all. Please also keep in mind, because the entire pattern is a diagonal structure, talking about the entire pattern from the 2022 low, we do not necessarily need 5 waves up from this low. Yeah. Quick explanation, a diagonal structure means the sub-wave structures are all corrective. So 3 waves in wave 1, 3 waves in wave 3, 3 waves in wave 5, and then this A wave can be a 3-wave move or a 5-wave move. And that means this can go down into the smallest detail, which means we don't need 5-wave movements, okay? If this entire pattern was an impulse, then it would be quite clear that we need a 5-wave move up, but we don't, okay? So this is all just potentially corrective from the low, and it can still keep going. So we need to not only watch the microstructure from an Elliott wave point of view for confirmation, but we also need to add relevant support levels to watch, which we're doing on the smaller time frame. It's just that we have to be more flexible, and I think that is what this entire cycle has shown us. I mean, essentially, it's just confirming what I've been highlighting to you all along. The entire cycle here that we've been witnessing and we've participated in, it's been incredibly difficult. It's not aggressively bullish as in previous cycles. There's a lot of volatility, but in both directions, obviously, up and down. There are often unexpected setbacks, you could say, but all of that is because we're not moving up in a stable, impulsive structure. We're moving up in a diagonal pattern, and we have to just be a bit more on the side of caution. Actually, not just a bit, but I mentioned it before that when we're tracking and trading a diagonal structure instead of an impulse, it can be 10 times more difficult to track and trade than an impulse. So I'd say as long as we're holding that last low, we can potentially assume, at least tentatively and carefully, that we are in a 5th wave to the upside, but it's not high confidence. So let's take a look at the smaller time frame. What we see here is still potentially a bearish wave count, short-term bearish, for one more low in this wave 4 I just showed you on the larger time frame. In this scenario, it's possible that a wave 4 formed up here and it completed up here on Monday, the 24th of March. That could be a top in an internal 4th wave that leads to one more low in wave 5 to complete, as I showed you on the larger time frame, this larger degree wave 4. Yeah, it might need one more low. It might need one more low. However, there is a support area in between that helps us distinguish between the white and the yellow scenarios. And in the white scenario, we are tracking here potentially a wave 2 pullback. So that would be the bullish variation. I don't like that wave count. It is visually a 5-wave move up. Wave 1, wave 2, wave 3, wave 4, wave 5 in the white scenario. And then this here could be an A, B, C. But yeah, we have to give it a chance. I mean, as I said, it's not guaranteed that movements to the upside are always nice 5-wave movements. So I don't want to miss out on that. I just want to highlight that support area. All I'm saying is we have to watch this support area. So to keep this bullish scenario alive, a so-called 1-2 setup, the market needs to hold above $1,824. Any break below it will shift the focus towards the yellow scenario for one more low. For now, this can be seen as a wave 2 corrective pullback. And as I said, it's an ABC structure. and that B wave bounce, yeah, that B wave bounce could be still unfolding. So if we zoom in further, I see 3 waves up from yesterday's low. That could be the A wave. This could be an internal B wave pullback, for which I can give you micro support, but that's really just a B wave and a B wave, so be careful here. I mean, ideally it's holding 1994 to keep that microstructure alive for one more high in the larger B wave. At this point, I wouldn't be surprised if it breaks down directly, but there's an area of interest there to watch 1994 to 2010. We can get maybe a bounce from there in wave C of circle B, and then from there, a move down in circle wave C would be possible, and then we have to watch this lower support region. Yeah. So basically, to keep it simple, 1824 is the main pivot that helps us distinguish between the white and the yellow scenarios. So to keep that white scenario alive, the market needs to hold above 1,824. What if we go up higher more directly? Well, it's just one more extension in potentially this wave 1. Yeah. Actually, maybe I should change the wave degree. I've highlighted that in gray, so alternative 1, yeah. That would actually give us a clearer 5-wave move, I have to say. So that's how I'm tracking this at the moment. Should give you all the levels. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.